The RBI's financial stability report, which has just been released. We've got Anirudh Ghosh who joins in with the details of the same. Anirudh, outline for us all of the challenges that have been read out by this report and what the final prognosis is of the financial sector.
Well, Awan, the main message coming out of this report is basically that the health of the Indian financial sector remains robust and it remains stable in the backdrop of the mounting domestic as well as global risks. But the RBI has very clearly said that there are a number of risks at this point of time which will affect the banking and financial system. So they've clearly outlined a number of risks which include the rising NPAs of the system and they include the rising capital needs also of the system. So clearly those are the two main factors which have been outlined by the RBI. So even in spite of these factors, the RBI very clearly says that the health of the banking system does remain robust. If you go a little more into the detail of the report, they really do talk about a lot of macro issues as well. They say that the health of the financial system at this point of time is robust, but at the same time there are a number of inflationary pressures that still remain in spite of the kind of in spite of the fact that inflation has come down in the past few weeks. Inflationary pressures in the RBI's mind are very much there in the system at this point of time. Also the fact that there are a number of other domestic factors which are plaguing growth. They've also mentioned that external factors are still really very influential in the system, and that the contagion risk from the EU zone does really remain very real. So clearly those are the external sectors and also the macro sector concerns that the RBI has pointed out. In terms of the banking sector in general, they pointed out a few sectors which they really are kind of worried about. They've pointed out very clearly that the power sector remains one which they're very concerned about. The higher than usual bank credit to the power sector is something which they believe could really be a cause for concern going forward. A number of other sectors as well, like the priority sector, real estate as well as commercial real estate, are something which they have pointed out as causes for concern going forward as well. Clearly they've also mentioned that banks will have to raise their capital going forward once the banking system moves to the Basel III requirements. So clearly, so these are a number of concerns that they've raised, but all in all they've painted a picture of kind of a cautious optimism as such, because they've said that the system really remains robust. A number of stress tests that they've taken into account, a number of extreme case situations also, and really all the banks have come out as a pass in this whole exercise that the RBI has taken out. So clearly that's the message at this point of time coming from the RBI, that the system remains robust, but there are a number of risks that need to be addressed by the banks at this point of time.